Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, Rick shares his path from a complete non-target school in the Midwest to breaking into a top MSF in Europe. Learn what he did that allowed him to break into a bulge bracket bank in London before his master's in finance, and why he turned down offers from a private equity megafund. What he did when bridges were burned with some recruiters, and how he ended up at a LongShort hedge fund. Enjoy. Rick, thanks so much for joining the Wall Street Oasis podcast.
Thanks for having me.
So it'd be great if you could just give the listeners a short summary of your bio.
Yeah, for sure. So I'm originally from Germany, but went to a non-target in the US, graduated back in 2010, then went for a Master of Science program in continental Europe, where I basically went through the traditional program of applying for internships. Went for some analyst position at bank like JPM, GS, MS, and then moved from there to a LongShort Equity hedge fund in continental Europe, and have been on the buy side ever since.
So you've been on the buy side. So you went, banking to buy side, which is pretty traditional. But what was interesting is you started out in the U.S. So tell me a little bit, why were you in the U.S. at a non-target randomly? You said you're from Germany?
That's correct. I'm from Germany.
So when did you move to the States, and why go to a school there?
No, it's actually very interesting because in essence, I got an athletic scholarship for basketball, and that's how I basically went to a total non-target in the US with no idea about finance and no idea about investment banking or markets for that matter, to be fair. Mm-hmm. And then just kind of learned about all this Wall Street, and actually through Wall Street Oasis at the time, funnily enough. And that's how I basically went about. But that's why I ended up at a non-target in the Midwest, that no one ever heard about. Yeah.
So they gave you a full ride scholarship to play basketball there?
That's correct, yeah.
And so you played basketball there. When during your undergrad were you like, hey, I'm at a non-target, I need to rebrand? Were you on Wall Street Oasis back then, and then you're like, I need to go get a master's now? Is that what the thought process was? Or was it like your junior, senior year? When did you kind of discover this whole world and think, hey, this might be something I want to do?
So I discovered finance in my freshman year, mm-hmm. through one of my professors who used to actually work on Wall Street and kind of treated, I guess, teaching as a retirement job or whatever.
Yeah.
And then I went on Wall Street Oasis without an account, to be fair. I just read everything I could. I think back then, actually, Wall Street Oasis was fairly fresh on the scene as well, if I'm not mistaken here.
Yeah, we'd started in 2006, so you were in early days.
Very early days then, yeah. But discussions back then were already very, very helpful, actually.
Was it still the monkey hanging with the banana? Was that her logo?
Yeah. Good times. And then basically I read through everything, and back then, to be fair, even though I was in the States, right, my plan was to go back to Europe at some point, and I did not have a clue about finance or M&A or anything, for that matter, or about Europe, because back then conversations and discussions on Wall Street Oasis were very much US centric. So whatever advice you got was very applicable to target schools or people that, could actually get a job in New York, but was not very applicable to myself. So basically I boiled it down for myself and said, hey, look, the only way I'm going to get anything in Europe is if I go back and actually get into a target school, because even though the process is a bit different, it's still the same principles you apply in the States.
So how did you even convince this target school to accept you for a master's in finance coming from where you came from?
No, it was a combination of very strong motivational letters, good recommendation letters, high GMAT score. Mm-hmm. People think that GMATs don't really matter. In my opinion, they really don't. But if you have a high GMAT, it makes things a lot easier for you if you apply for schools, no matter where.
Okay, fair. So you get in, you're at this Master of Science program in continental Europe, we'll just say, and it's one of the top schools there. And you start applying immediately for investment banking. Is that what you knew what you wanted to do?
Actually, let's take a step back, because what I did was actually something that I actually learned on LongShort Equity. What I did was, once I was basically done with my bachelor's degree, I actually started coming up with a process to network in Europe. So what I started doing was writing all these cold emails and reaching out to God in the world, trying to find him or someone who wants to talk to, this nobody from the Midwest in the US that they never heard about, to kind of get some kind of info, or just a leg up on getting an internship somewhere.
Mm-hmm.
And I did that for a very long time, and actually built an extensive network. I used to use Excel to track everything that I did, from calls, emails, network, everything.
How many people do you think you were reaching out to back then? Were you using LinkedIn back then?
I used everything. I used Facebook, LinkedIn. I used a platform called A Small World, which was kind of a social community. I literally networked everywhere. But LinkedIn probably was my let's call it bread and butter. And if I can remember correctly, I was for sure in 4 digits, so basically 2 to 2.5K of emails that I send out over probably 4 to 6 months. So I was literally doing nothing else for almost 4 months.
So this is after you graduated undergrad?
No, this was basically my last semester.
Your last semester.
In my last semester, I only took very easy classes. So for me, I know I had a lot of time on my hands.
So you were completely focused on, okay, I need to get to Europe, so I need to meet with people. So were you doing a lot of international phone calls?
I was, yeah, a lot of international phone calls. And then I got back home, and over the summer I networked even more. And obviously, parallel to that, I had started applying to various Master of Science programs throughout Europe. I'm sure everyone who's listening to this knows the program. So I was lucky, because when I got into the school that I got into, which is one of the top 2 feeder programs into London, I had networked with so many alumni of that school that basically I knew all of them already. So I just basically, could follow up and say, hey, look, I'm now at the same school that you went to. When next time I'm in London, let's grab a coffee, let's go for lunch, let's do this, let's do that. And then from there, it was actually quite almost a snowball, because everyone that
how many people out of that 2,500 you so just to repeat that for listeners, you reached out to 2,500 people cold emailing over a period of 6 months.
Yep.
So you were motivated.
I was very motivated. Yeah.
That's awesome. And so once you got into this Master in Finance program, were you also studying for the GMAT at the same time, or was that once you moved home?
No, I basically did that in my second to last semester.
Oh,
so
wow.
Basically, I knew I had 1 year, and I knew where I wanted to get. So I took the first semester of that last school year to focus on the GMAT, and the second semester, once I had my scores and my applications in line, to basically focus on networking.
That's awesome.
And yeah, that's really how I did it.
And I love it already. This is you're like you're a machine going after this. So you get like, it's a lot of work, right? You're doing like 40 hours of networking a week at least. It sounds like.
That's basically what it was for a very long period of time. Yeah.
Yeah. So you had kind of all these alum from the school you ended up going to. You'd already reached out. You'd already established a connection. Then you could send them an update email and be like, "Great news! I got into XYZ school. I'm going to be at the same program you are." So did you feel like it was like you had already established a connection, then all of a sudden you have even a stronger connection? Was it a big percentage of the people you had reached out to? So out of the 2,500, maybe only 700 got back to connected with you, or 300, I don't know, 400, then maybe only a couple hundred talked to you on the phone. And then is that accurate in terms of how it funneled down?
It was, yeah, basically. So to be fair, conversion rate on cold emailing is very low.
Mm-hmm.
I've noticed that there's a clear difference between seniority of people. Of course, an MD is not going to get back to you as quickly as a junior. Mm-hmm. However, I have to say the DMDs and EDs or Ds, whatever, in banks that actually got back to me were the most helpful.
Okay.
Because either they had a similar background saying, non-target, or just because they understood what I was trying to do and were actually very impressed by the motivation that I displayed, because I think not a lot of people do the whole networking thing and reach out to people and kind of make themselves known.
Yep.
And then the ones obviously from my university, from the university that I went to, were obviously very much, you added the personal touch, right? Because suddenly, you're in the same program. They really like what you're doing.
So was it like 10 people would you say that you'd had established connection with? There was like a handful, like 5 or 2?
No, I think it was a bit more that I got a connection with. So basically, let's say out of the ones that I actually talked to, that I met up with, I had probably a strong connection with maybe 10 to 12. And out of those 12, I would say probably 6 became actual friends or, very close acquaintances. And out of those, one for sure became a mentor for the first, let's say, 5 years of my career.
That's awesome. And so once you're in this program, this Master in Finance program, is it almost like a surefire thing that you're going to get an internship? Or sorry, is this Master in Finance, is it a 1-year program? So you're applying right away for full-time right when you start?
No, that was I made the deliberate choice to go for a 2-year program because I wanted to have the chance to have a summer program and then come back.
Okay, so you had the intern. So but you knew pretty soon once you got onto campus, you knew you were going to be applying to internships.
Correct. Yeah.
And so tell me how that process worked. Was the reason you got into a Bulge Bracket bank, was it because you had these connections, or was it just through the on-campus recruiting?
I think it was, so basically, one of the things that I want to point out is you really don't need to do a lot of networking to go through the traditional ways of applying. And there's enough people that just get internships because of applications. But for me, knowing back then that I was not the most, streamlined candidate, the combination of networking and applying really made the difference. Because at some point, for instance, the bank that I later joined for my summer program and then full-time afterwards, basically I literally knew, even on the floor that I ended up working on, I knew every guy that went to my university. And out of those, at least a handful or 2 pushed for me for the internship.
Great. So that kind of made the difference. It was really that groundwork you put in before even applying that you think helped you get the summer analyst position. And was it really competitive at your Master of Finance program? So I don't know, let's say how many people were trying to get summer analyst positions at banks and how many people ended up with them?
Top of my head, I don't know the numbers, but I know that everyone
rough numbers, like rough.
I'll probably say that probably 20% actually got internships in London. But from the whole class, throughout continental Europe, everyone got something.
Okay.
But not always necessarily what they were actually aiming for. But I think for that class, placement was fairly strong in London.
Okay. So you get into a strong group at a Bulge Bracket. You're during the summer analyst. Was the interview difficult coming out of this Master in Finance? Were you prepared for the technicals and all that stuff?
That's actually the funny thing about it, because that's actually why I think that my networking helped so much. Because I've interviewed at a lot of places, and I had more than one summer offer. And to be fair, the one that actually accepted in the end, the interview was basically a day long. It was basically an assessment center, and it was all focused on soft skills, how well you do in group conversations. The technical side was not really talked about. And I was very, very, very prepared for technicals, because I was thinking, they're going to grill me so hard on everything, like mental math and how to do a DCF, or, how does an LBO work, or what does a sponsor look for, and so on and so forth. Or the typical accounting questions. And at the end of the day, nothing like that ever happened to me in any of these Bulge Bracket investment.
So all that prep that you did was thrown out the window, and you were forced to all of a sudden have these weird group conversations and interviews.
Yeah, and I thought, maybe I can, maybe shine somehow, if I display my, at this point, very granular understanding of financial
all of a sudden you start walking
statement analysis, but no one cared.
You start walking through a DCF suddenly without
out of nowhere.
Yeah.
Have you ever thought about how to do a DCF? Like, no, that's not what we're talking about here.
So the interview kind of wasn't technical. It was more soft skills. Did you feel like you were prepared for that, or did you feel it was just natural for you, or had you prepped for anything like that, doing mock interviews?
I had not, no. So to be blunt, I felt a bit like thrown to the deep end, and it was a bit unexpected, because I fully expected to be grilled on, very technical things. But at the end of the day, it just comes down to common sense, right? And I think that's really what they were trying to test or see how you do in group dynamics, because I think that's the attitude these days in banks is really we can teach you everything anyway in 6 to 8 weeks, so why would you bring all these technical skills with you?
And so what do you think is the toughest part, like in terms of how should you behave in those group interviews? How do you behave in those kind of behavioral? Do you have any
So
guidance?
I think you should have, I mean, when it comes to behavioral questions, you should think about them before you go in. You should have good answers because, the ones that you read in, even no matter how good these manuals are, but whatever you read in, the interview preps, it's, they've heard it a million times and they don't find it convincing if it's the same, boilerplate or template that you give them, right? But if you come up with something unique that is actually fitting to your persona, it works much better. And for the group discussions, I mean, you need to be able to actually discuss and think about or articulate your opinion in a certain manner that actually convinces people around you. And if you have trouble doing so, then I would advise that you practice that somehow.
I hear that a lot, but I think a lot of it's like how genuine you come across, right? So it's like, you're not just regurgitating some boilerplate answer. You're actually being genuine and not BSing, right?
That's a very good point. And one thing I want to add really quickly, because I had a friend who actually got killed by this in one of those group things. People have a tendency when they sit in group meetings or group discussions to let other people talk over them. And I've learned throughout my years at that bank that this is an automatic KO criteria. So one advice I would give people is don't let anyone talk over you in an interview when you sit in a group discussion, because it will not do you any good with people that are assessing you.
Meaning somebody just jumps in and interrupts you?
Yeah, exactly. These are things, that I never really got why, because, there's people that are just not as, let's call it loud. And some people will just, take a step back.
That's
But that's
interesting.
not
To me, I would think that if somebody interrupts you and you try to like interrupt back, I think it could look bad on both of you.
No, entirely, I agree. But there's always ways you can play this in a favor for you. You can also say, hey, look, let me just finish my sentence, please. You can express it. You can tell me your opinion afterwards. And it shows maturity to a certain degree, and it shows that you can deal with pressure, right? But at the end of the day, it's just one of the things, because it happened to a friend, and I felt it was very unfair. And it was one of those things where I thought, like, he was very good at what he was doing. He was very prepared, and it literally killed his chances. So.
How did he know that it killed his chances?
Well, because he was 2 years below me, and that was the feedback we had in my group about his performance. So.
Interesting. Yeah, I wouldn't think that would knock you out. So you were at this bank for a while. You did a lot of deals.
Yep.
Tell me a little bit about what it was really like to be on the inside. Finally, you kind of reached your goal and you had reached the promised land, and then you were working probably incredible or crazy hours, right? Am I right?
Yeah, I mean, it starts off really good because they sent you to New York for training,
And you're
and then you
partying
have a
in
great
New York.
exactly, you have a great time in New York. You live it up. You have a lot of fun. And then you come back and you're thrown to the deep end, and suddenly you sit there. You start at 8 a.m. and you don't get home until the next morning at 4 a.m. and you wonder why you're doing this, right? My team was a very tough team. We covered a lot of industries. We covered all products. We did a lot of deals, a lot of big deals. I think we had at some point I had to keep an Excel of my working hours because they wanted to make sure that we are not overworked. So I think my average was at some point in my second year was above 100 hours, which was brutal. So
The average was over 100 hours.
Yeah, that was the most brutal year I had. So my first year was okay. My second year was brutal, and I left basically beginning of my third year. So
Because you couldn't take it anymore, basically. You're like, I'm out of here.
no, because I had offers, and I always said, I'm going to do this for 2 years, learn whatever I can, because I know how the game works, right? You do 2 to 3 years of banking, you get out or you don't.
Okay. Tell me about the process of when you were looking. I know you ended up at a hedge fund, right?
That's correct, yeah.
So tell me about the process of recruiting for buy side or hedge funds out of the London office.
It's very similar to the States, I have to say. So basically, there's headhunter firms that basically in your first. I mean, I got my first headhunter calls, I think, the second day on the desk.
Yeah.
And literally the first call I got was, hey, you just started, I know, but have you ever thought about joining a hedge fund? And I was like, I have never thought about this right now at this point, but maybe what are you thinking? And then you meet for coffees with headhunters, you you basically are put in a file. I think you kept in a loop, and you kind of. I mean, my first year, I think I also did, to be entirely transparent here. In my first year, I did 3 processes for private equity firms as well.
Mm-hmm.
Mega cap. They're basically just like the US. They're the first ones to call you. Then you go in 6 months in, you have your interview, you have an offer for your second year, basically, right?
Did you get an offer, or did you strike out on those?
I got an offer from one mega fund and one mid-market fund. So one is American, one is European, but they both want me to relocate to Munich, and I did not want to move to Munich
Tell me why.
because I just got to London and I didn't want to leave after a year again. Plus, I felt that I did a lot of sponsor deals in my first year. I mean, relatively speaking, right? It's not like we closed 25 deals, but
Yeah.
I worked on, a number of RFPs and a number of live transactions that sometimes never went anywhere, too closed, and it was always buy side stuff. And to be fair, I didn't get the feeling that the people on the other side were doing much better than I was in terms of hours, in terms of lifestyle.
Got
So
it.
I felt that private equity felt a bit more like a continuation of investment banking.
Yeah, banking
Um,
2.0. Banking 2.0 is what they call it sometimes at the mega
Yeah,
funds.
yeah, yeah, totally, exactly. I fully agree. And then I kind of, again, that also came through my connections from my university. I spoke to the guy that I mentioned earlier that became a mentor, and he was a partner at a hedge fund.
Mm-hmm.
And I said, hey, I'm looking at what to do next. I always enjoyed markets. I've been buying stocks since I was 15.
Mm-hmm.
Is that something I can do for a living, right? And he explained to me basically the things he was doing, and I thought it was more interesting to keep an eye on the markets and the world economy than work in various processes or work streams, and that was it.
So you kind of had it was interesting. You went through the process of the mega fund in the middle market, and it was really early in your banking days. You turned them down, even though you had offers.
Yep.
And did that make you nervous?
Which, sorry, if I may interrupt, that did not boil well with them, by the way.
The
I,
bank
I
or
remember
the
getting
fund?
late night phone calls from one of the partners at the US fund, and he was really pissed.
Wow.
But anyway,
Why do you think they're so upset? I mean, they have so many sharp people, right?
I have no idea, but he was really upset. Maybe he pushed for me very hard or whatever. I have no idea, but he was really upset.
I bet the recruiters weren't too happy with you either.
Nope, that firm that got me those interviews, I never talked to again.
Jeez. So you had enough confidence to turn these down. Why do you think you had that confidence? I mean, you feel like, okay, I'm at a good place, and you felt like the mentor gave you that confidence, maybe?
Yes. So basically, on one hand, obviously my mentor, to be fair, and on the other hand, I always say if something doesn't feel right, just don't do it,
I mean, people do
because
not turn down those offers. That's super rare.
it is very rare.
Like that's
Um,
probably why the guy was going crazy on you. Like, are you stupid? Like, what are you doing?
those were almost exactly his words. It was kind of like he used a very nasty word, but I don't want to repeat it here, but.
It's okay. We can mark the episode as explicit if you want to repeat it.
No, I think he called me retarded. He
Um,
called me retarded, and he put a lot of F words in there and a lot of F bombs. It was a very weird phone call to get at 10 p.m. But look, at the end of the day, it didn't feel right to me. I didn't want to do it. I kind of had another friend who was a similar fund doing his summer program. He was in an MBA program at the time, but he was doing a summer internship, I guess.
mhm.
And we compared notes, and he basically just validated my thesis. So I said, look, that's not for me.
And so how did you go into and then the reward for not accepting those offers is you go into your second year and you start working 100-hour weeks. So were you ever thinking in your second year, like, what am I doing? I should have already had an offer lined up, or did you
More
quickly
than once.
or did
More
you
than once. I sat there at my desk sometimes at 4 a.m. or 3, about to kick myself in the ass and say, hey, look, you're literally the most retired person for turning down those offers, because at the end of the day, you should have taken those, ran with it, and see where it takes you. But then kind of, the first, let's maybe 3 months in my second year were really bad. Then it kind of, it didn't get better work-wise, but suddenly, recruiting in the hedge fund space picked up, and I got a number of interesting interview opportunities.
And so
Um,
these are from recruiters you hadn't burned bridges with, obviously.
Basically, yeah.
And they, did you tell them? Did you tell them that you had turned down private equity offers because you're really interested?
I did, yeah.
Yeah, that probably made you more attractive.
Which is not very helpful. Full disclosure, because when they hear that you've basically turned down an offer before where someone else in their same position invested a lot of work, then suddenly you become a liability or you become high risk, right?
I don't know if you say like it's because I really want this hedge fund, then you become a liability in the sense of like you're not afraid to turn down an offer, but you also show that you know what you want. So you may be a higher like to close. Like if you tell them like if I get this offer, I'm in.
Yep, and that's the only reason why these people work with me, because I said, look, I turned it down because I didn't want to be on the private side anymore. I'm not going to do the same if I am successful in a Headstrong process.
Okay. So how did you prep for the hedge fund process? You had a long, short pitch with a couple on each side.
Yep, basically. So again, I went and I spoke to I spoke to my mentor. He was kind enough to introduce me to a couple of people that were on. So basically, I wanted to join a LongShort Equity fund.
Mm-hmm.
So basically, I said, hey man, do you know anyone in LongShort Equity space? He introduced me to I believe two or three guys. One was long only, so it doesn't really count. But he had been at a long short fund as well, so he had good intel on the process.
Mm-hmm.
And I said, look, what do I need? And they all said the same thing, like have pitches ready, have a long idea, have a short idea, preferably two. And then you go in and you can show them that you know what you're doing, because that's what they're looking for. It's not like banking where they look for, does he tick the boxes or whatever. It's like, can this guy actually make money for the firm? And that's how I prepared.
How did you even come up with those ideas? It sounds like you really loved public markets. You'd been trading since a young age. So was it just stuff you had actually been trading, or did you do research outside of what you're doing for your personal portfolio?
So in essence, I the long ideas weren't that difficult because it's I always say it's easier to find good long ideas because at the time also the market was going up anyway, so you could have pitched anything that was a growth stock or whatever, you would have made money, right?
Yeah.
I was having some difficulties in the beginning with the shorts, and screening for shorts was also an issue.
Mm-hmm.
On top of doing it while working long hours in the bank, right? So admittedly, for the first couple of pitches, I got some help from the guys that I was talking to, more as a sounding board though. So basically I would pitch an idea and they would say, hey, look, man, this is just not going to fly. Or, that was actually the initial feedback for 2 or 3 pitches. Or they would say, look, man,
this was in an interview process, or this was with like mock interviews with friends?
This was in mock interviews, yeah.
Smart. Okay, so you were testing these out to see if they would actually fly.
Exactly. And then, in some pitches, like, hey, this is the right idea, but the work you're putting in, if you want to convince someone to actually give you a job, it's just not granular enough. Which is decent feedback because, when you sit somewhere and you do something, you always think it's very good or it's great. But at the end of the day, when someone else looks at it and says, hey, look, there's so many flaws in this, you should really sit down again. You're going into the right direction, but you need to do more work around this, look at this risk factor in more detail, have an answer for this question, And then, and then I just took it from there. And then I came up with some really good pitches. I got a hang of it, how to generate ideas because of that, to be fair, which I still use to this day.
Mm-hmm.
And then I went in for, I think, maybe 4 funds that interviewed me.
Mm-hmm.
I got to the offer stage with 2.
That's great.
And then basically I last minute got an intro to someone else, and they ran an accelerated process for me, and I accepted the offer from that fund.
Very cool. So tell me a little bit about the work you did at that fund. It was LongShort Equity, right?
Yep.
And did you feel like so knowing kind of what the hedge fund space has been through over the last several years, it's been kind of a rocky few years.
Yep.
Did you kind of have your eyes wide open seeing that already unfolding before you went into this fund, or was it something that like you started and things started kind of crumbling? I don't even know if this fund that you were at did really well, or what the whole pattern was, if there were a lot of redemptions. But can you talk to me a little bit about like what you saw going in and how the whole industry kind of evolved while you were there for a couple of years?
No, for sure. So basically, the fund that I worked for was focused solely on continental European equities. And at the same time, one of the major shifts within Europe at the time was, I would say, a greater focus on shareholder activism. So when I actually joined, and I joined halfway through a year, the long short was not performing well at all. We were down, I think, 2 or 3%, which is not a killer, obviously, but it's not great either. But at the same time, we launched a dedicated activist product.
Okay.
So I was lucky enough that I was one of 2 analysts in that firm focused on long short, but the only analyst focused on shareholder activism.
Tell me what is, for the listeners that don't know what shareholder activism means, tell me, like, can you give me a quick summary of what that means? Like, what is a hedge fund trying to do when they're...
So basically when you are an active shareholder, you take a stake in a company, be it, usually you go for a significant stake, or at least so that you appear in a shareholder register if you don't have as much money. And then you literally push for change in the company because you believe that there's value to be unlocked.
So,
I tend to call shareholder...
So can you give me an example? Can you give me an example? Like, so you would go and buy up 10% of the shares outstanding, and then kind of,
for instance,
demand a board seat, or like, what would you do? Like, say, hey, we need to fire the CEO. He's terrible. Like, what would you?
I mean, so throughout my time there, we did 3 campaigns. So basically, we covered all the, let's call it, basic campaigns that a shareholder can run. But the first one was probably the best one, because we basically went in, we bought 10% of the company. We placed 3 people on the board. We fired the CEO. We went for cost cutting, and then we made the company sell itself to a conglomerate. So that's basically literally tick all the boxes of a shareholder campaign. In the second campaign, it was a bit different.
Were you able to unlock a lot of value with that trade?
Yeah, I mean, we bought shares, and don't quote me on this. Let's call it in the 15s, 16s.
Yeah.
And the company was taken over for 90.
Wow. So, and how long did that take? 2 years?
Yeah, it was a 2-year campaign.
Yeah, that's great. It's a great return.
Absolutely.
Okay. And then, sorry, go ahead. You were going to give me another example.
And then a second campaign that we did was basically we bought about 4.5% of the company. Was much larger than the first target, but that case was solely based on cost cutting. So we published numerous plans about how to cut costs and how to streamline and increase efficiency. And to be fair, the company never did any of this. Share price still doubled, and we got out with a nice little profit.
So they never did anything of it, but do you feel like the publishing of those reports and the promotion of those reports puts pressure on the company?
No, yeah, exactly. That's the beauty about public markets, right? Sometimes fantasy just propels share prices up, even if nothing ever happens.
So they didn't actually implement any of the cost cutting or the streamlining that you said, but you kind of outlined the path to greater profitability or better margins for this company.
Yep.
And that was, you think that played a role in the share price going up so high, or do you feel like it was part of a bull market and you guys were...
No, the stock had underperformed everything, and once we came on the scene, you can actually every time we put something out, the share price went up. I think it was a combination of like the fantasy of, or maybe they'll do it, and number 2, we believe if they don't do it, they'll make them do it by going to the AGM or replacing someone like they did last time.
So fantasy becomes reality.
Exactly.
People want to buy before that happens and before it's announced.
Exactly.
Okay, so really interesting. So is this shareholder activism, do you feel like this is fairly common in hedge funds? Are there funds? There are certain funds that are just dedicated just to that, right?
No, yeah, totally. I mean, there's dedicated activist funds. Usually they're long only. There's some that have a long short portfolio and they do activism opportunistically, but try to hedge it via the short book. Or
Ackman against Herbalife or whatever.
Yeah, kind of like that. Yeah. But that was a short seller campaign, right? I mean, I think if I remember correctly, he was betting that it'll go to zero, and he got burned on it heavily.
Yeah, I think initially it dropped, and then Icon came out and said he's full of it. This company's fine. It's growing fast, and then rocketed back up, and it was just back and forth. But
that's obviously a derivative of an activist campaign, right? I mean, if Ackman goes somewhere and presents a short case, and I think Dave made a Netflix documentary about it,
yeah,
that's a form of activism. But in Europe, for the time being at least, there's some short selling activism, but not a lot. But there's a significant increase in shareholder activism where people try to unlock value either by reducing complexity or by replacing people and so on and so forth.
Do you think that's more common now that long short equity is under pressure?
think that's one of the reasons, yeah, because in essence, the question is always, and it's a valid question, right? Because since '09 we've been in a bull market, right? It's the longest bull market, if I'm not mistaken, for ever in the history. So basically, you have hedge funds charging 2 and 20, right? People say, hey, look, you're not outperforming your index. Why should I give you 2 and 20, right?
Mm-hmm.
But if you have an activist program, you always say, hey, look, because we buy shares in companies, we actually work for our money by implementing strategic changes, and you can see the work we're doing because there's press releases, so on and so forth.
Right.
And I think that's a valid point to be made.
Very cool. So you're there. It sounds like you're enjoying your time. You have a couple of really good trades.
Yep.
And you leave, or what happens? This fund shuts down. Why did you leave?
No, so in essence, the person who was the founder of the company at some point decided, hey, I'm gonna basically shut it down after almost 20 years. So basically, there was nothing to be done anymore.
Was there because of a lot of redemptions and it was just because there's a rough patch, or do you feel like it was because he was just wanted to retire?
No, he just wanted out. He made enough money, he wanted out. He wanted to basically go for the second spring, so to speak, new wife, blah blah blah. Anyway, and yeah, and then yeah, one thing led to another, and another partner of that firm and I got together and said, hey, look, let's start our own, and we took some investors from that fund and seeded a new fund, and we basically managing it in the same fashion that the old fund was managed, and we try to do the same things.
Okay, so you've been doing that now for the last couple of years?
Roughly, yeah.
Roughly. Okay, and then I guess just in terms of that whole process of like spinning out, can you talk to me a little bit about like what somebody would do to position themselves well for like creating a new fund like that? I assume there was a ton of work to do. I mean, you had the LP or you had the relationships with the investors, right? So that
Exactly.
wasn't as much work, but just in terms of just getting the whole fund structure up, were you one of two people that were founding that new hedge fund?
Yep.
So was there a lot of work on your plate, just logistical stuff?
Funnily enough, not really, because in essence, the structure we have is very common.
Okay.
One thing that basically I always say, if you start a hedge fund and you actually do have either seed capital or you have family and friends that actually believe in you, you need, let's say, I mean, in Europe at least. Okay, I can't speak for the US because I know in the US you need a lot more AUM because of regulatory costs and so on and so forth. But in Europe, if you, let's call it, play it a bit smart, and for the first couple of years keep yourself under the radar and don't manage too many assets, because at some point you cross a threshold where you actually do have significant regulatory costs. You invest 150K and you have the chance to become a multimillionaire. It's almost like a call option.
And so the fund was relatively small.
Initially, yeah.
And is it something where you saw yourself doing this, or you see yourself still doing this, staying in the hedge fund space, or is it something where you're thinking, I've had my taste of the public markets? I mean, what's your thought now with like the whole, do you feel like you want to focus more on the activism stuff? You feel like that's still a place to unlock a lot of value?
No, to be fair, I think, first question to answer that, totally. I mean, if you really do love public markets and if you see yourself doing this, then you stick with it, and that's just what you do. Even the old guys, old, not being disrespectful, but even the older guys that I know have been doing this for 30 years, even those guys, they, even if they stop running a fund, right, they still sit at home in front of a computer and sometimes trade or have a portfolio of their own money, right?
Right.
So if you do actually love this, you don't stop doing it. And why would you? Because there's not a lot of things in the world where you can make, and I don't want to sound like, very like a douchebag, but there's not a lot of things in the world where you can make a lot of money like this, just trading stocks. No. Or trading anything, right?
So I guess, speaking of money, do you mind going through kind of the comp or rough ranges of what you had when you were at the Bulge Bracket Bank, and then kind of how that changed when you went hedge fund, when you went buy side? No,
for sure. So, and take these with a grain of salt, because, I mean, again, first of all, so I'm not going to try to put this in dollar terms because I don't know the exchange rates, but anyway, so basically in pound, for my first 2 years, I think I got 50 and 55 consecutively. And then they upped to 60 in my third year, and bonuses. So I always had a very strong ranking. So I guess top bucket bonus, I would assume, but I think my first year, my bonus was 50. Second year was 54, and my last year I did not have a bonus because I left.
And so that's that's pounds or euros?
Pounds, yeah,
Pounds.
GBP.
So yeah.
But I heard that the bonus in the third year was basically almost, for top bucket also almost 100% plus the associate sign-on, which I never obviously got. But and
So
then
once you jumped to the
once I jumped, and now I can give it to you in dollar terms because I basically know. So basically, my first year, total comp for it. I mean, for the long short, it was a shitty year. For the activism fund, it was a great year. So it kind of balanced out. So my first year, I got 300K total comp all in. Second year was closer to 400. And then in my third year, we left halfway through. So I just got to basically stub, right?
Stub, yeah. And was
that was not representative.
Was the
plus and one caveat, because I mean I was basically as a minority equity partner in the business after my second year, right? So there was some kind of economics that flew back, that basically had some cash streaming to me, but that was because I owned shares in the management company.
Got it. And so you were getting management fees.
Exactly.
Yeah. And so can you tell me a little bit about specifically the balance between base and bonus there, though, at the hedge fund? So was it skewed more? Was it like, I don't know, you can tell me, like, was it much higher bonus or was it pretty even like banking?
No, it was much higher bonus, but just because so basically the way that the guy ran his firm was basically he obviously had a portfolio, but every analyst had his own P&L.
Oh, okay.
So basically, if you made money, then you got a higher bonus. If you lost money, then your bonus was not as great, right?
Yeah.
So in essence, for me, my performance part was significantly higher than the base.
Because of those activist trades you did?
And because of the long short stuff that I did, yeah. So it was a combination.
Okay. That's kind of nice because
I mean, if I give you the percentage, so basically, if you probably 1.5 times base or even 1.8 times base, and then obviously the shares on top. So that was a addition on top.
Great. So anything else before we call it? Any kind of advice you'd give to the younger listeners that are playing basketball in the middle of nowhere at a non-target? How do they follow in your footsteps? How to go besides sending 2,500 emails? I guess that's they could start there.
I mean, it's the same advice that anyone probably would give you if you are literally in the middle of nowhere. You really need to network a lot. You need to make sure that you get your name on somehow on the radar, and try to make, I call them ninja moves. Make ninja moves so that you basically you stay under the radar, but you're still somewhere close to the people that can make decisions for you, right? Just network, beef up your CV. Don't be ashamed to actually take the first internship for free. It sounds stupid, but that's just the reality we're in. And then everything else will fall into place. And I mean, there's ninja moves, right? I mean, I'm sure you've heard about search funds. There's a lot of search funds that pop up, left and right. If you play your cards right, you can do an unpaid internship there, which is basically nothing less than a PE internship these days, because these guys are so streamlined. It's almost like working for a fund.
Interesting.
And maybe a bit more startup-y, but it's still deal sourcing, LBO modeling, so on and so forth. That may be a ninja move, right?
Any other ninja moves you have up your sleeve? I mean, it sounds like you weren't doing too much ninja moves. You're doing more brute force moves when you started.
Yeah, but you know how it is. Once you get older, you get wiser. Another thing that I really enjoy, and that I kind of did back then as well, you can always come up with investment ideas, and there's enough platforms out there these days where you can pitch these, right? You can always upload them, you can pitch, you can get feedback on them, right? It's never too early to start trading your own account if you want to be in a public market fund, because people will ask you about your track record. And if anything you ever bought was Facebook, then good luck.
Facebook's IPO at $38. And then
then I mean, okay, fair enough. You probably don't need to.
And then it tanked. No, and then it tanked.
And there's just some. I mean, I'm a big fan of reading a lot of books, but if you really and you know this as well, because I mean, you can read all the books in the world, but when it comes down to it, there's maybe 5 books that really can help you. And for anyone out there, another point that I will make, there's a book called Financial Shenanigans. Maybe get it, read it, understand it, and you'll be much better positioned for interviews than most of your peers.
Great.
And I think that's literally everything I can advise someone to do, because at the end of the day, it comes down to hard work and how much you want it.
Agreed.
Yes.
Let's end it there. Rick, thanks so much for joining us today.
Thank you very much for having me, Patrick.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.